Hello everyone, Dr. Aakash here again, and welcome to the You Smile channel. And today we're going to talk about a few important things to remember when you're buying a dental insurance. Check out what is the plan maximum. The more the plan maximum you have, that is pretty much what the insurance company says that to how much amount they're going to pay towards any dental treatment. It can be $1,500 or $2,000. The more you get, the better for you if you have extensive dental work that needs to be taken care of. And there's always a deductible with these dental plans, especially the PPO plan. And what it means is before the insurance pays anything, you have to pay this deductible. And usually it starts with any basic procedure like filling, extractions, deep cleaning. All those you have to pay the deductible, which is $50 on an average to begin with. On top of that, you have to pay an additional copay. So just be cautious about it. If there's no deductible, that's the best thing to have, or lesser deductible, it's better to have. And because it's for each individual member in the family, so pretty much if you're a family of 4, you have to pay $50 times 4. It's like almost $200 comes out of pocket right away if each one of you have been diagnosed with a filling or something. So be cautious about a few clauses, and the most hurting clause that dentist always sees is that there's a waiting period. You have an insurance, but there's a waiting period for 6 months or 12 months. That's really a killer, because you need a treatment to be done, and basically the insurance is saying that before they pay anything towards this treatment, you gotta wait for 6 months or 12 months. Make sure you do not have a waiting period, or just be prepared that you have to pay out of pocket for the treatment if you end up getting an insurance with the waiting period clause. And usually it happens with only small employer groups where they don't trust whether the employee is going to stay on board for a long time, so they put this clause, and it's very common with the small employers. Second, it's called missing tooth clause. It's something Mr. Obama tried to take it off in the Affordable Care Act, but unfortunately with the dental insurance, it's still there. What it means is basically it's anything that is pre-existing is not covered, or pre-existing condition is not covered by your dental insurance. In simple terms, like if you got the tooth pulled out today and tomorrow you go and get an insurance and you're saying that I want that tooth to be replaced with a bridge or an implant, the insurance is going to put a missing tooth clause, and they will just simply deny it, that you cannot get a payment towards the treatment that you're trying to get because you already had the problem before you got the insurance. The other most common thing is a downgrade factor. It's basically what it means is the insurance try to give a cheaper alternative of treatment payment. It's not that the dentist is saying that you go for the cheaper alternative treatment, but the insurance is saying that we will pay for the cheaper alternative treatment regardless whatever your treatment you're getting. So say for example you're trying to get a white filling in the back tooth, because the insurance consider that it's not visible when you're talking, so they will try to pay only for a silver filling. Sometimes silver filling is good, but it's individual to individual, like what you want to decide and how the dentist feel is the right thing to do for you. But similarly, like when it comes to crowns also, sometimes most of the insurance don't pay for the porcelain that looks white in color, so that is also a part of the downgrade factor. And sometimes it's really hard for patients to really understand. It's like when they have missing tooth on both the sides and they are trying to replace that with a bridge on both the sides, the insurance really go hard on it and they downgrade it to a partial. They ask you to wear something that is removable in your mouth. You have to clean it every day, which has to be taken out before you go to sleep, as compared to the fixed bridge that can stay permanently and you can take a good care of it. So anything like bridge or an implant is a permanent option. They downgrade it with partial or a denture for an alternative, and it really drastically cuts the cost that the insurance has to pay out of their pocket as compared to what you pay out of your pocket. So that's one thing that you need to be aware of, the downgrade factor. Sometimes you just end up getting all these clauses in your plan. There's nothing much to worry about it. It's just that you have to be mentally prepared that you'll have to pay out of pocket. Maybe that just you might have paid a little lesser for the cost, or that may be the only option that has been given to you by your employer. So thanks for watching. I hope it was very informative. If you really liked the video, please hit the like button and subscribe to You Smile channel. Let your friends know about it. Any questions or concerns, please ask the question below. I will try to do my best to answer it, and I just see you smile.